Yes, people, a very happy with all of you. So, guys, finally, we're commencing with the revision batch today. And the very first chapter that we're going to start today is Fundamentals of Partnership, which is a part of your partnership series. So, as we did the regular classes, in the same order, we'll go with the revision batch. So, first, we'll complete the first volume of the T.S. Rival book, having or containing 7 chapters, followed by the second volume, where we'll be discussing the issue of share capital and debentures. Then followed by the third volume, where we'll be discussing the financial statement, tools of financial statement, ratio, and finally, cash flow statement. Right? So this revision batch is going to be a game changer. If you attend the classes without fail, if you're absent, come to the next class by watching the recordings of the classes that you missed. Aggressively follow the revision techniques that I'm going to suggest. Trust me, I'm telling you, all those people who think that or are thinking that if I pass this subject is more than sufficient, you land up in 80s and 90s. And with the revision technique that I'm going to, advise you, if you follow religiously, trust me, those who are confident will get 90 and above. There are high chances you might end up getting 98, 99, even 100. Right? So revision batch, we started with the notion, mission 100. That is a target. I want every single person to have it. It is very much possible. You've seen 1 centum in the last year. That is possible. That has given me hope that yes, in CBSE also we can get centum. But religiously have to follow the revision techniques and all the classes to be done properly without missing any one. So even people who are out of track this while, this is the last chance for you to bounce back and get back on track and get going with the scores. Can we start?
Yes, sir.
No energy.
Yes, sir.
Can we start?
Yes, sir.
Yes, sir.
Wonderful.
Yes, sir.
Accounting for partnership firm fundamentals. Small, one more point. See, if you look at the fundamentals of partnership that we did in the regular classes, we've spent nearly about 16 classes, comprising of each literally about 2 hours. If you minus the break here, 10 and 15 minutes, maybe 1 hour 45 minutes ka average classes I have taken. This is a revision batch. Revision batch means what? Definitely I'm not going to re-spend the 16 classes. Whatever contents we've discussed in those 16 classes, it will be concised in, let's say, 5 or 6 classes. 1/3 or 1/4 of the time you have to finish it. So to make this session, more comfortable, if you want to feel that comfort in my revision classes, there's one request that I've put forth to all of you. I'll give you a topic in advance, which I'm going to take in the revision class. You have to just revise those topics once and whether you understand, don't understand, that's a different story. But you go through so that you become familiar with the topic that I'm going to discuss. Dishti, yes or no? So if people, you've done the revision today as requested, well and good. If not, at least from next class onwards, please try to follow. Because the pace of the revision batch is going to be slightly faster. Because we have only 2 months to cover up the revisions. So please ensure that whatever I'm advising you religiously follow. In India, if you want to do business, you need to have a form or a body in which the business could be operated. You need to have a form or body in which the business could be operated. So what are the various forms in which you can do business? What are the various forms in which you can do business? The first and the foremost form, the most comfortable form of doing the business is a sole proprietorship concern. Now, there are certain inherent limitation in that model. To overcome such limitations, what people do, they look up to forming the partnership concern. The partnership concern again has some inherent limitations and problems. To overcome that, people look up to forming LLP, which is called as limited liability partnership. People have certain constraints in LLP. To overcome such constraints, people look up to forming companies, etc., etc. So what are the constraints in the sole proprietorship business? Very concisely I'll discuss. We've discussed this elaborately in the regular classes, but here a very fast recap. The first constraint. Okay, before that, who is a sole proprietor? A sole owner is a person who's got the sole idea of doing the business. He is that one person who's got the idea of doing the business. He is that one person who mobilizes all the funds that is required to start the business. He is that one major person to look after the operations of the business, be it marketing, be it sales, be it HR handling, be it finance, accounts, whatever. He's the sole leader in every department. He's basically a one-man army. At the end of the day, for the risk that he is taking, he will reap all the benefits all by himself. This is the concept of the sole proprietorship concern, the accounting of which we've studied elaborately in your 11th standard. Preparation of the final accounts of a sole proprietorship concern. Now, the sole proprietorship concern has some inherent limitations. To overcome that, people have looked up to forming partnership. So, what are the constraints? First is a capital constraint. As a single owner, how much money can I invest in the business? 10 lakh, 20 lakh, 30 lakh, 50 lakh, 1 crore, 2 crore. There should be one limit, no, beyond which I cannot invest. But by investing that extra money, we have potential to expand the business. We have potential to expand the business. The profit could be multiplied. So now, in sole proprietorship concern, there's only one owner. So I want an equal owner to come on board and take care of those responsibilities. So therefore, I need more money. I need more money to expand. We need more money. We have one branch in, let's say, in Araspuram. I want multiple branches in Coimbatore. I want multiple branches in different city. So setting up one branch costs me 20 lakh rupees. So one person, how much I can invest? So definitely, to overcome that constraint, I might look up to having one more partner. So capital constraint in sole proprietorship concern could be overcome if you are forming a business in form of a partnership concern. Second, risk constraint. In the sole proprietorship concern, there's one single person taking the entire risk of the business. All good and bad in the business is belonging to the sole owner. So you want the risk to be split. You will look after a person who's interested in taking up the risk the way you want to take the risk. If you want to split the risk, you will onboard a partner. Because with more risk, what comes? More profit. Higher the risk, higher the profit. So if somebody wants to enjoy higher profits, if he is willing to take the risk, definitely you can take him as a part owner. Third constraint, management constraint. FFLA, Kalpavriksha Academy, as a single person, I'm very well managing this particular branch. Let's suppose I have a branch in Pilamedu, let's say in Saranampatti, Tirupur, Erode, Chennai. Do you think one person, I, can go everywhere and do the management? Not possible. So you will tell, sir, put a staff. No, he will do the management. Whether a staff will put that heart and soul. As an owner, I put, all of you know, I do counseling till late night, 12:30, 1:30. Do you expect a staff, even a top class management, to do that counseling 12:30, 1:30 in the midnight? No, because after all, for him, it's a job. For us, it's a different perspective. For owner, it is life. He wants to make that brand reachable. So he'll work 24/7 also. At the end, he's getting the profits. So he'll work for it. But that's not the case for the staff. So when you want somebody to, share the management role, that effectively as you want to do it, then definitely you look up to forming a partnership concern to onboard a partner. Then expertise constraint. Single person, sole owner. He has to take care of multiple departments. Marketing also he takes care of. Accounts, finance also he takes care of. Operations he also takes. Everything he takes care of. Imagine my situation. Everything I'm taking care of. Where and all I'll put my head. So I have a problem in doing a digital marketing, let's suppose. So I'll hire a person who is expert in digital marketing, because any business, marketing, if it is strong, the leads will be generated, and more leads, more sales could be converted. So if I hire a person, I might have to pay heavy salary, which I may not afford. But on the other hand, if the person is that good, if I offer him a partnership, and because of him, where I'm now getting 10 leads a month, if he's able to get me 100 leads a month, look at the amount of revenue that I'm going to make. So for that, I'm also willing to share my profits. So like that, there could be multiple expertise constraints. So you might take somebody on board who's expert in your field, make him the partner, hence form a partnership concern. This is how the concept of partnership is come into picture. Any problem here?
No, sir. No, sir.
Now, what is the meaning and definition of partnership? Partnership is defined by Indian Partnership Act 1932. What is the act? It is a rule book. It's a rule book that has been designed by two parliament. One is Lok Sabha, second is Rajya Sabha. So earlier years, in 1930s, there's a need of such law to be created, because if the law is not there, everybody will try to do things on their own, and at the end everything will be disaster. That's why we have rules and regulations across. No? You're sitting in this room, you're governed by rules and regulations of the academy. The moment you step out of the academy, you're governed by the rules and regulations of this complex. The moment you enter outside the complex and get on the road, you are governed by the rules and regulations of the RTO. Correct? The moment you get into your apartment, there's a rules and regulations of your apartment that has been laid down. The moment you enter your house, you have to follow the rules and regulations that is laid down by your parents. And by chance, unfortunately, if you have your elder brother and sister, if you can enter that room, you have to follow the rules and regulations of your elder brother and sister. I can see some good faces. Ah, shit, sir, don't remind us this. The only freedom where you have bathroom. We are surrounded by rules. We are surrounded by rules. And rules are very important to make you disciplined. Hence, in 1930s, there was a need for the rule to be created for governing the partnership business. So, the proposal was given in both the houses of the parliament, Lok Sabha, Rajya Sabha, through the major voting. They passed the act. They passed the rule. That rule, which has been approved by both the houses, it goes to the Honorable President of India for getting the assent approval. Once that is approved, the rule book becomes the act. So like that, we have multiple acts for multiple things. So here we are governed by which act? Indian Partnership Act 1932. Will you forget this? In section, define what is partnership. Now listen to me very carefully. In your board exam, you might get, or you will not, you will get theory questions, direct theory questions. What is the meaning of partnership? Define partnership. Whenever they ask you what is the meaning of partnership, you can write the meaning in your own way. That is, you can write it in your own language, as long as it makes sense. But when the question is about define partnership, define means you cannot write things on your own. There's a definition given in the law. You have to write the definition as it is without altering a single letter. So now we are discussing about definition. Define partnership. So what does the act says? Partnership is relation, not relationship. When I ask what is the definition of partnership, people write the entire line properly. One mistake they make. Instead of the word relation, they make relationship. Technically, meaning doesn't change. But in definition, you cannot alter a single letter. Forget the word. You can't alter a single letter. That is the beauty of definition. So should we study all the definitions? Not required. I'll tell you the important definitions from the examination point of view, which is very crucial, critical. That alone you have to by heart. One among that is this. If they ask you what is partnership, define. This is what you'll write down. Partnership is relation. Relation between whom? Relation between persons. Who are those persons? Those are those persons who have agreed to share the profit of a business, which means they've decided to come together to do a business and they want to share the profits. And this business will be carried on by whom? The business could be carried on by all the partners together. All of them could be the active partners. Or any one of them could act for all the other partners. Am I clear? Online people, am I loud and clear?
Yes, sir.
Yes, sir.
This is definition of partnership. Meaning, if they ask you, you can write the meaning in your own language as long as it makes sense. But definition should be exact same line without altering a single letter. A partnership thus is a business relationship between or among two or more persons, minimum two or more persons who share profit and losses of the business. That may be carried on by all the partners. All the partners together can manage the business. Or if there are three partners, ABC. AB says that we have money, we want to invest. I don't want to take the headache of management. I will not come to manage the day-to-day affairs. C, you take the responsibility. Like that, who's saying? A and B are saying. So here C is the active partner. And A, B are the sleeping partner. On behalf of A and B, who's managing all the work on day-to-day basis? C. So here, C is acting on behalf of all of them. So either all the three partners can participate in the management, or any one of them could take participate or management. Sorry, take part in the management of the business. Am I clear with this point? Now, the person who have entered into partnership with one another are individually called as partners, and collectively they have called as firm. Individually partners. In sole proprietorship concern, we say owner. Here they have given a technical name called as partners. And the name of the organization, the form of the organization, this is been suggested as firm. So this business organization has been referred by name called as firm. And there's so many partnership firm. So how do I identify what is this firm? What is this firm? There should be individual identity. No? We all are human beings, but there should be individual identity. So what has been done to us? The name has been allocated for each and every individual person. Same way, the name under which the business is being carried on, it's called as a firm name. So you should have a unique firm name. Now, nature of partnership. Partnership from legal viewpoint is not a separate legal entity. Oh my God. We have studied something in 11th standard called as separate legal entity concept or business entity concept or accounting entity concept. What does it say? What does it say?
Account from the point of view of the business.
When you do the accounting, you have to do the accounting from the business point of view. The owner point of view, because owner is different, business is different. Owner is separate, business is separate. But here, law says that for me, you both are not different. You both are same. So partnership from legal viewpoint is not a separate legal entity from its partner, since firm's debt are payable from the personal assets of the partner. If the firm is unable to repay the liabilities. We have discussed this case elaborately in the which chapter? Once we discussed it here, one more time we discuss elaborately, even more elaborately. Where? Dissolution. Imagine this is the assets of the business. 25 lakh. Capital 5 lakh. Bank loan 20 lakh. Correct? This is the present balance sheet of the firm. Here, the assets of the firm is 25 lakh. When you go and sell it in the market, do you think you'll get same 25 lakh as it is?
No, sir.
No. You might get same 25 lakh. You might get more than 25 lakh. Or you might get less than 25 lakh. You might get less than 25 lakh. There's no guarantee as it is. Imagine a scenario where you try to sell the assets, it fetched you only 15 lakh rupees. How much money will you have at the end of the day? 15 lakh rupees. So all the assets are sold, converted into cash, how much? 15 lakh rupees. And now this 15 lakh rupees, to whom will you pay first? Sir, the external liability holders, banker. So banker has got a loan of 20 lakh rupees and firm's asset could fetch us only 15 lakh. Now the banker is crying for the remaining 5 lakh. Boss, what does the law got to say here? Law says that if you're a partnership concern, you enjoy unlimited liability. Means what? If the firm's asset is not sufficient to pay the firm's liability, whatever the deficiency is, this deficiency could be recovered from the partner's personal assets. That is what is called as unlimited liability. Unlimited liability. When somebody comes and attacks my private assets, that liability is called as unlimited liability. Now in the dissolution topic, we'll understand how this 5 lakh is recovered from the partners. That time we'll deal with it. But as of now, just understand that if the firm's assets are not sufficient to pay the firm's liability, then the partner's private asset could be under risk, under threat. Hence, it is called as unlimited liability. Any problem?
No, sir.
So, partnership from legal point of view are not separate entities, are not separate legal entities. Now, why I'm saying this point again is because, see, you guys will focus where, very comfortably and very much you'll focus on the practical questions. You take the history of last 4 years, people have scored 99, 98, 97, 96, 95. Majority of the people have lost the scores where, MCQs. Case-based studies, assertion-based questions. So those questions are formed on the basis of the concept. If these concepts are not clear, when the questions are twisted, you will not be in position to answer those MCQs properly. That's why I'm repeating this point again and again. So legal viewpoint, legal law says that both are not separate. But accounts, business entity concept, accounting entity concept says what? From accounting viewpoint, both are separate. Legal says both are same, but account says both are separate. However, partnership firm and partners, firm and the owner are two separate entities from accounting viewpoint, because the transaction are recorded in the books from the accounting viewpoint, not from the, a record from the firm viewpoint, not from the owner's viewpoint. They ask you, what is the liability of a firm? What will you say? The firm enjoys the status of being called as a unlimited liability. The liability of partners in a partnership firm is unlimited. Please make a note of this point. Not in the notebook here. Anyways, I'm going to share this note with you. Note means here. All the partners are having unlimited liability in the firm. And very important. All the partners are jointly and severally liable for the liabilities of the firm. So this point where it is given. Where is this point given? If you take your second volume company accounts, there's a particular place where difference between the partnership and company accounts has been given. Here it is. The partnership concern, sorry, in the second volume, TSVL book 8.2, if you see, this is the difference between partnership and company. Fourth point, the liability of the partner is unlimited and all the partners are jointly and severally liable. Very important term this is. I wish they would have given this point where, here, but you make a note of it. Now, the question that arises is that, sir, what is the meaning of jointly and severally liable? We've discussed this in the regular class. So one more time asking, what is the meaning of jointly and severally liable? A, B are two partners. They've taken a loan of 10 lakh rupees from the bank. If they don't pay this 10 lakh rupees, the banker will hold whom responsible for this payment? Both A and B jointly. Now this money will be recovered. This money will be recovered by the banker in proportionate to the profit sharing ratio. So A and B are jointly responsible. In what ratio? Not equally. They never use the word equally. Equally responsible. Nahin. They use the word jointly. Means A and B together are responsible. But in what ratio? In their profit sharing ratio will try to recover the money from their private estates. What is the meaning of severally liable? What is the meaning of severally liable? No. Sometime when you go and approach, when the firm goes to the bank, approaches for the loan, banker will ask for the guarantee that in case of the default of the payment, I want a person concrete on the paper who will take the responsibility for settling this liability. So let's suppose out of this A comes out and says that I will take the responsibility. If something goes wrong, you can recover the entire money from me. If that contract is agreed between the firm and the bank. In this case of the default of the loan, who is responsible for the payment? A alone. So A is alone severally liable. Severally means what? Separately, individually liable. In this case, you cannot help B liable because there's a specific contract between the firm and the banker stating that if there is a default of the bank loan, A will be held responsible and you have to recover the money from A. So there's a specific contract to it. Which means here, who is severally liable? A is severally liable, not jointly. Not jointly with B. Are you able to understand this point?
Yes, sir.
Yes, sir.
Now, essential features or the characteristics of partnership. You might get this question as a 2-mark question, 4-mark question. Please lay down the essential features or the characteristics of partnership concern. Is it that tough? Very easy. The first characteristic of a partnership concern is that you should have 2 or more persons to form a partnership concern. 2 or more. Minimum 2. If only one person is there, then that is sole proprietorship concern. Minimum 2 I should have. So what is the minimum number of owners in the partnership concern? 2. 2. Now, there must be at least 2 persons to form a partnership concern, and all such person must be competent to contract. Competent to contract means what? Those persons should be eligible to enter and sign the contract. Now, there's one separate act called as Indian Contract Act. As per this act, as per this rule book, they will tell you who are not eligible to sign any contract. In that, 3 people are not eligible to sign the contract. How many people? 3 people are not eligible to sign the contract. First person is a person of unsound mind. Unsound mind means what? Mental. Don't write mental, pental and come in exam. It doesn't look professional. You have to write a very polished way. Mental means, how do you say? Unsound mind. Unsound. Sound. Soundness. Mind soundness means what? You're able to think on your own. You're able to act on your own. You're able to decide on your own. That is called as a soundness of a person. Unsound means what? A person who's not capable to make his own decisions. Who's biased, who's influenced, mentally retarded, cannot make his own judgments. Can such person enter into contract? If he enters into contract and commits somebody, if he takes a loan from the banker, signs the agreement, can banker hold him responsible? Let's say one Mr. A, he ran away from the Agra mental hospital. Banker did not know. Banker signed a loan contract with that Mr. A. Now can Mr. A sue? Sorry, can bank sue Mr. A in the court of laws? Not possible, because that person is unsound mind. He's a mentally retarded person, incompetent to enter contract. So here, whose default it is? Banker's default. How did you get the loan? How did you give the loan without checking the background completely? It's your fault. So, and a person of unsound mind cannot enter into partnership as a partner, as an agreement. You cannot sign it. Second, person who is disqualified by law. Mr. A, smuggler from Dubai, smuggling gold. He's been disqualified by the law. If you go to any police station, you can see the person, a smiling face, called as a smuggler. Can you take that smuggler as your business partner? No doubt he's got a lot of money. No doubt he can fund your business in multiple ways. No doubt he can be an advantage to you in the business. But these persons are incompetent to enter into any contract. These persons are incompetent to enter into any contract. Hence, a person who is disqualified by law cannot be added to the partnership concern. Point number C. Minor. As per Indian Contract Act, a minor cannot enter into any agreement. He cannot sign the contract. But Partnership Act is given a special power to minor, telling that a minor, what is happening here? Partnership Act has given a special power. So there's an overriding clause given in the Partnership Act which says that a minor could be added in the partnership firm for the benefit of partnership, though he is incompetent to contract. A minor, though not competent to contract, he is a C person, third person who is disqualified by Indian Contract Act. He cannot enter into any contract. But the special powers is given to the minor through Partnership Act. A minor, though not competent to contract, can be a partner in the firm, but only in the profits of the firm. He will only share the profits and not any losses. By adding this minor partner, if the firm is benefited, if the business is benefited, you can definitely take him as a partner. A minor partner should accept or refuse partnership in the firm within 6 months of becoming the major. When does somebody attains majority or major? When does somebody become major? 18 years should be completed. 18 years of age should be completed. 18th birthday should have been completed. From there, 6 months of time has been given. You either have to accept to be a partner or you have to reject the proposal and come out of the partnership. If he or she does not so decide within that 6 months, if they're not deciding whether to continue the partnership firm as a partner or should I quit, if they're not able to decide, then he or she becomes liable for all the actions since he has become the partner. When has he become the partner? He became as a minor partner. No, from that day, whatever the liability of the business is there, he will be held responsible. Because minor is only, as soon as the partner is a minor, he can only enjoy the profits. He will never enjoy any losses of the business. If there is any loss in any particular year, when you distribute the loss in the P&L appropriation account, you will not distribute the loss to the minor. But profit is there in the P&L appropriation account, then that profit will be distributed to minor. But the moment the minor becomes major, within 6 months you have to say, yes, I'm continuing as a partner or I'm quitting the firm. If you don't say, you'll become a partner by default and all the liabilities retrospectively, since you became a minor partner, all the liabilities has to be proportionately settled by that minor partner. Any problem? Logically also makes sense. Logically also makes sense. Now, next is maximum number of partners. Unfortunately, in the Indian Partnership Act 1932, maximum partners should be so much, they've not mentioned. Unfortunately, when the law was drafted, in the law, they forgot to include the maximum limit for a partnership firm in the act. Hence, this was included where, Companies Act. The Partnership Act 1932 does not prescribe the maximum number of a partner in a firm. However, the Companies Act, the Companies Act in section 64 has empowered the central government. So the Company Act law rule book has given the authority to whom? Central government. Who's the central government at present? Who's the central government at present? BJP. Before BJP, who was the central government? Congress. Central government I'm talking about. So whoever is running the government at the central level, they have the power to set the maximum limit. So now the rule book has told that central government, I'm giving you power. I'm giving you a power and you can set the maximum limit of partners in a firm, but that should not cross more than 100. So the law has empowered central government that you can keep the maximum limit of a partner, which is 100. In that, central government has utilized their power and they said as of now in India, if anybody wants to have a firm and if they want to have the maximum partners, it should not be beyond 50. The central government, however, out of the limit what has been given to them by the rule, Companies Act is given the empowerment to central government, no, that you can have maximum 100 partners. In that, the central government can play with the maximum partners. They can make the maximum limit 50, 60, 70, 80, 90, 100, but they cannot make it beyond 100. The law restricts the central government to not increase the maximum partners limit beyond 100, but up to 100, and within 100 they can restrict. So as of now, central government has utilized that power and restricted the maximum limit to how much? 50 partners. The central government has prescribed maximum number of partners in a firm to be 50. Through, why it means through Rule 10 of the Companies Miscellaneous Rule 2014. So law has given power to central government to prescribe the maximum limit, which should be not more than 100. But in that, central government is prescribed how much as a maximum limit? 50. Now, central government, through the official gazette notification, can increase the maximum limit from 50 to 55, can increase to 60, 70, 80, 90, 95, 99, 100, but not beyond 100. So through the notification, they can increase the limit, but not beyond 100. So now the maximum limit is how much? 50. If somebody asks you what is the present maximum limit of the partnership firm prescribed by the Companies Act is how much? Prescribed by central government is how much? 50.
50.
Whereas the Companies Act is empowered central government to have how much as maximum partners?
100.
Empowerment is for 100. In that prescribed is how much? 50.
50.
As a result, a partnership firm cannot have more than 50 partners. This is a strategic move by the government. Because in any business which demands more than 50 partners, they are forcing them to go for companies. And companies is more advantage for the government of India. So this is a strategic move that they have adopted. Now comes a very important point. Agreement.
Sir, a doubt.
Yes, boss.
Sir, the question asked like means what is the number of partners prescribed with partnership act is it is nil as an answer.
Nothing is prescribed, no.
So answer is nil.
Again, you have a question with you in your hand.
So no, sir. I am asking that the answer is nil, sir.
If they ask you what is the maximum number of what is the maximum number prescribed as a maximum partners in the Indian Partnership Act, the answer is the Indian Partnership Act has not prescribed any maximum limit. The maximum limit is prescribed in the Companies Act. Okay, va?
Okay, sir.
If it is in form of MCQ, then depending on what option is given, you'll have to choose. If it's a direct question, it's a theory question where you have to write it, then you have to state the answer in such a way that Indian Partnership Act does not prescribe any maximum limit. However, the maximum limit has been prescribed in the Companies Act 2013, in which the Companies Act has empowered the central government to have the maximum upper ceiling limit of the partners as 100. In that, the central government today has prescribed the maximum limit of partners as 50.
50.
Like that, you can draft it in your own language. Understanding is important. Grammatical formation of sentence, you can do it. Maximum, if they ask you what are the maximum partners in the firm, is 50. Guys, shh, if they ask you what are the maximum number of partners at present, means 50. Now, very important point. Agreement registration. The Partnership Act has said you it is compulsory to have agreement. Listen to my words, very important. It is compulsory to have agreement. Who's saying this? Indian Partnership of 1932. But what is the mode of agreement? That they have not compelled it. So you can have either an oral agreement or
Written.
written agreement. Agreement is compulsory. Agreement is compulsory. But that does not say that agreement should be in oral only or should be in writing only. The mode of agreement is not suggested, which means you can either have the oral agreement or the written agreement. If you have the agreement of partnership in writing, it is called as partnership deed. And to avoid conflicts, it is always advisable to have it in the writing. Because orally you say something and you forget, no, I said this, you understood in that way. If you don't want that oral conflict to come, it is always better to have it in writing. Because if tomorrow something wrong happens, you can always refer the document. So in the court of laws, having a written agreement is much better, and you can settle the case faster, close the case faster than going for an oral agreement. So can we have the agreement in the recording format? Sir, in WhatsApp, edit voice recording, sir. Is it possible? Possible. What did the act say? Agreement is must. Whether you have oral agreement, recording is there, not there, writing, that they are not compelling. You have it in any form, man. But agreement is compulsory. So agreement, what is the meaning of agreement? Sir, agreement is nothing but all the terms and conditions to be followed between the partners for the firm. All those terms and conditions are detailedly elaborated in the agreement. Such as profit sharing ratio will be this. I will operate the bank, you will operate that. Interest on capital should be paid or not be paid. Interest on drawing should be paid or not be paid. So all the rules and regulations, terms and conditions between the partners are listed one after the other in the agreement. And at the end, they sign the agreement. That is what is agreement all about. Any problem?
No, sir.
No, sir.
You see page number 3. It's a legal document. It's a legal document signed by all the partners having the following clauses. In that, what will be there? Description of the partner, name of the partner, partner's father name, his Aadhaar number, address, etc., will be there. What is the firm's address? Registered office is there, where place of the business, nature of business, what you're following. When are you starting this partnership business? What is the capital contribution? How much A wants to contribute? How much B wants to contribute? Should we charge interest on capital or not? If yes, what is the percentage? Should we calculate interest on drawing or not? If yes, what is the percentage? Like that, everything. What is the profit sharing ratio? All the points between the partners is agreed in the written format. That is called as partnership deed. Agreement could be either oral or written in the basis of partnership. It is always better to have written agreement to avoid any disputes. The written document is called as partnership deed, where it details, outlines the terms and conditions between the partners. Terms and condition between the partners. Any problem? Agreement is clear.
No, sir.
In the regular classes, we went through all these points one after the other, one by one, everything in detail. Now here we don't have the time to go through all in detail. You might get a 4-mark question. Please list out the contents of the partnership deed for 4 marks. How many points you'll write? 8 points. Each point for half mark. So at least 8 points out of this you please have to remember. You might get a 4-mark question. Please lay down the contents of the partnership deed, 4 marks. So mark this as a very important point. Now comes registration. Registration. Partnership Act says that registration of the partnership agreement is
Not compulsory.
optional. Sir, what is the meaning of registration? Registration means registering the partnership deed with local government. Registering the partnership deed with the local government. You're operating in Tamil Nadu. So if you are opening the partnership form, if you are registering, if you are doing the firm a business in Tamil Nadu, you have to get the document registered with the Tamil Nadu government. If you are operating a business in Karnataka, you have to get the partnership deed registered with the Karnataka state government. And for registering this document, you have to pay a small amount of stamp duty fee to the government. I'll be to follow. Some people have a confusion. Sir, I prepared a partnership agreement with the stamp paper. Do you understand what is a stamp paper?
Yes, sir.
Stamp paper. So
Yes, sir.
recording in the stamp paper or printing in the stamp paper itself means registration is what people think. No. If you take a printout of the partnership deed on the stamp paper, it does not amount to registration. What is a registration? Registration is basically go to the registrar office. You give the document to him. He'll put his sign, seal, all the process. And he will note down that agreement in his system and upload in the server of the Tamil Nadu government. That is the registration process. If I have to relate this, if you go and buy a property, let's say in Coimbatore, if you buy a land, let's suppose, you will execute a sale deed that this land is coming from this person's name to this person's name. All the condition has been listed out in the sale deed. Everything will be in the stamp paper. everything will be in the stamp paper. 5,000 rupees stamp paper, 10,000 rupees stamp paper, 50,000 rupees stamp paper. It will be a stamp paper. But that is not a completion of the sale. The sale gets completed when you know this document, what you have printed, signed by the seller of the land, signed by the purchaser of the land. This has to go and be registered with the government office by paying appropriate stamp duty fees. By paying appropriate stamp duty fees, which means this entire arrangement between the buyer and seller is being documented in the government ka portal. So tomorrow, if anything happens between those two parties, when you go to the court, the matter will get settled just like this. That is the power of registration. If you don't register it, the case might drag a bit more. But nowhere in the Partnership Act they've told that you have to compulsory register. So registration is optional. But Companies Act, the process that is being followed, everything you do with whom? ROC. ROC is what? Registering body. ROC is what? Central government's registering body. So company cannot be created without registration. So company gets created only after registration process is done. The preparation of MOA, Article of Association, is like partnership deed. And that what it is supposed to do? Upload with the ROC portal. And ROC will approve it. So that is the registration process. So company gets created only after registration. But partnership gets created upon creating the partnership agreement. Upon creating partnership agreement, the firm is born. The firm is alive now. So registration is not compulsory for the partnership concern. It is optional. You need not register with the local government body. This is registration. Are you clear with the difference?
Yes, sir.
Yes, sir.
Now, partnership comes into existence by an agreement, which could be either oral or in writing. It is the basis of relation among the partners, which may be for a particular venture. Now, what is this telling? This line, this partnership, what you're forming could be for a particular venture. So, what example I gave you? Let's say all of us together, 50 people, we want to construct a apartment, 300 apartments. 300 apartment, if I have to construct, imagine how much money we need. 50 people are putting that much money. Okay. Now, when we started the partnership concern, we said that this business will close when? Upon the last unit of the apartment being sold. In apartment, if there are 300 flats, the 300 flats are called as 300 units. Upon selling the last unit, once all this formality is completed, the business will get dissolved. So in that case, in the agreement, you have to mention that this partnership is for a particular venture. Once the venture is accomplished, once the purpose of the venture is accomplished, you will close the business. That is called as having the partnership for a particular venture. Or it could be for a particular period. Means when we started the firm, we don't know how long we will survive together. So in the agreement, we mentioned that, okay, let's run this business for 5 years. After 5 years, the business will get automatically closed. Sir, at the end of the 5th year, if you don't want the business to be closed, if I want to continue the business, then what are you supposed to do? Change the partnership deed. You have to amend the partnership deed. Increase that limit from 5 years to the extended period. Or make the partnership at will. What is partnership at will? Means that we will close this business whenever we feel like closing. Until then, the business will keep on running. The firm will be kept on running. So either the partnership could be for a particular venture, it could be for a particular period, or it could be at will. Whenever the business is for a particular venture or a period, upon the accomplishment of that particular venture, after the expiry of the period, the firm will automatically dissolve. If you don't want to dissolve the business like this, then before the venture is being accomplished, you change the clause and make it at will. Before the period is expired, change the clause, make it at will. Once you make it at will, which means you can close the firm whenever you want. Am I loud and clear?
Yes, sir.
Yes, sir.
Third point, a partnership should be formed to do business. Which business? Legal business. You cannot form a partnership for doing illegal business. This is point number 3. 4, the agreement between the partners should be to share the profit and loss of the business. You have to clearly lay down the profit and losses of the partners very clearly in the agreement, either oral or in writing. 5th point, very, very important. High chance of the question coming from this segment. Business can be carried on by all the partners or any of them acting for all. Now, the 3 partners, A, B, C. Now, all the 3 partners are willing to work. Means each of them have taken their own responsibilities. All of them are working partners. All of them are working partners. Then here, who is agent to whom? Who is agent to whom? Sir, all the 3 are agent. Who is principal? Sir, all the three are principal. Sir, what is the meaning of agent, sir? Agent is the person who is working on behalf of the owner. So here when that A, B and C are working all together, they are called as agent of the firm. And firm is represented by whom? ABC. So they are by themselves called as principal. Principal means what? Owner. So business could be carried on by all the partners. When they are carrying out the business all by themselves, they are called as agent. The person who gets on the ground and do the groundwork, does all the work, is called as a worker. Worker is named here as agent. And the worker is working for his own self. Is working for his own self. Ultimately, the final profit is going to whom? The owner. The owner here is called as principal. Now let's suppose there are three partners A, B and C. Here the agreement is designed in such a way that where A and B said that, see boss, we have a lot of money, but no time. If you want, we can invest the money. You have to manage the business. Who is telling? A, B is telling to C. So who is doing all the work for the business? C is doing all the work for the business. So here who is the agent?
C.
C is the agent. Who is principal? All the three are principal. So agent is that person who does the groundwork of the business on day-to-day basis. And for whom is doing? For the principal. Whatever act the agent does, it is binding on the principal. If something good and bad agent does, C does, whatever the consequences of that is there, who has to bear? All the three of them. All the three of them. Now listen to me very carefully. Business of the partnership may be carried on by all the partners. Can I say this is the first scenario? In the first scenario, all the partners carried out the business. Or by any one of them acting for all the partners. So who is carrying out the business here? In the second case,
C.
He is acting on behalf of whom?
A and B.
A and B. In other words, partners are agent of other partners. So in case 2, who is agent and who is principal?
Agent is
In other
C.
words, partners are agent for other partners. So who is agent for whom? So C is agent for other partner A and B. So in other words, partners are agent for other partners as well as the principal. So in case 1, when all the three are working, they are agent for themselves and they are agent for the principals. As an agent, he represents other partners. As an agent, I represent other partners and thereby binds them through his act. Binds them means all the other partners through the act. As a principal, the other partners are bound by the act of other partners. One example I'll take. This example I'll take. A, B, C, all the three are working, okay? Now, I want a bank loan. Or let's say the firm wants a bank loan. So A is approaching the bank. Do you think that if a firm needs a bank loan, all the three partners everywhere they'll go? If I have to sign any contract, do you think all the three partners will go everywhere? For every decision making, for everything, if all the partners go, when will we complete the work on time? So this is a case where A, B, C are in 3 different cities. So A is based out of Coimbatore. He goes to the bank, says that bank, I want loan. And whatever the agreement document is there, I will sign. So here A becomes agent because he's doing the work. He's signing on all the documents on behalf of all the other 3 partners A, B and C. Now whatever act A has done, the consequence of that, if let's say loan is not paid, who will be held responsible? A as a principal, B as a principal and C as a principal will be responsible for the act of the agent A. So whatever agent A does, he is bound by it in the principal capacity and he also binds the other 2 partners. So if somebody asks you, what is the relationship between the partners? Very important. The relation among the partners is that of a principal and an agent. What is the relationship among the partners? It is that of a principal and agent. So a partner could be both principal as well as agent. In situation 1. In situation 1, A is both principal and agent. In situation B, the person C is agent as well as principal, whereas A and B are only principals. So what is the relationship between both of them? What is the relationship between A, B versus C? It is that of a principal and agent. Very, very important point. Any problem?
No, sir.
Now, rights of a partner. This rights of a partner is been given by the Partnership Act. If you want to alter the rights, you can alter the rights. So I'm not going this much in depth. I want all of you to just quickly go through all these points except point number 5 and ask me for the doubts. Because this point elaborately we discussed in the regular classes, I don't find any sense to discuss this again elaborately here. So please go through and let me know if you have any doubts. So these are the rights given by the Partnership Act. If you want to change, alter the rights, you can do it, provided you document in the partnership deed and everybody is signing to it. I'll take one small example. As per the law, every partner has right to participate in the management of the business. Means ABC are 3 partners. Means law says that all the 3 of you have the right to manage the business. This is the normal law. But if the partnership wants to agree on a different points, where let's say there are 3 partners ABC, all the 3 are agreeing that C will not participate in management. Who's agreeing? A also is agreeing, B also agreeing, C also agreeing. And this point is mentioned in the contract, partnership deed, that A and B will manage the business and C will not manage the business. And on that agreement, A is signing, B is signing, C is signing. Which means, which law will prevail? This law will prevail, or what is specifically agreed in the agreement will prevail? Whatever is specifically agreed in the agreement, that will prevail. Whatever is specifically agreed in the agreement will prevail. If nothing is mentioned of that sort in the agreement, then this will prevail. So these are the general rights of the partners. If you want to alter the rights, you can alter it, provided all the partners agree for that alterment. Any problem?
No,
so
sir.
go through the 4 points. 5th point, you leave it. I'll discuss later. In this 4 points, do you have any doubts?
No, sir.
Easy. Please go through the point number 6, 7, 8 also. You discuss this elaborately in the regular classes. Any doubts here?
No,
Make
sir.
sense?
sir.
Yes, sir.
Okay. Certain provisions which has been discussed in the Partnership Act in the absence of the partnership deed. Guys, here, focus here. Here. You know what is partnership deed? Sometimes the business does not have the partnership deed. There's a conflict. There's a fighting. They go to the court. So court says that as per Partnership Act, we will follow all this. So either in the absence of partnership deed or the partnership deed is there, but we forgot to document the following clauses. We forgot to elaborate the following clauses. In such case, the provisions of the Indian Partnership Act 1932 will apply. In the absence of the partnership deed, when the partnership deed is not there, or the partnership deed is there, but it does not have any clause in respect of the following matters, then the provisions of Indian Partnership Act 1932 will apply. I'll go with point number 2 first. Partnership deed, not there. There's a conflict between the partners. I will take so much profit, you will take so much profit. Both are fighting. Ashmit, both are fighting. Where do they end up? In the court. So what does the court says? In the absence of partnership deed, Indian Partnership Act says that the profit and losses will be shared equally. Who says this? Rule book, Indian Partnership 1932 says that in the absence of partnership deed, the profit sharing ratio will be equal. Sir, partnership deed is there. Deed is there. Everything is done and written. But by mistake, in the partnership agreement, they forgot to record this clause. This point number 9 is there, no profit sharing ratio clause. By mistakenly, out of oversight, they forgot to document it. So partnership deed is there. All the points are there except this point. In that case, what will be the profit sharing ratio?
Equal.
Any problem?
No, sir.
Second
No,
point,
sir.
interest on capital. Either partnership deed is not there or partnership deed is there. Partnership deed is saying pay interest on capital on the capital, but percentage not mentioned. So the clause is not complete. In that case, there's a fighting. When the fighting comes, what does the law says? In the absence of partnership deed or the partnership deed is silent about the interest on capital cost, the firm will not pay any interest on capital. Not paid. The firm will not pay any interest on the capital. So if you want, as a partner, if you want the interest on your capital, ensure in the agreement this clause is mentioned along with the percentage. Any problem?
No, sir.
No, sir.
Next is interest on drawing. partnership deed is not there, or partnership deed is there, but you forgot to mention the percentage of interest on drawing. In that case, law says that nothing doing, we cannot charge any money from the partners. The firm cannot collect any money on the interest on drawing. On the drawings, you cannot collect any money as interest. So in the absence of partnership deed, the interest on drawing is not charged. It is 0%. So what have I done here? I've made one simple note here. Assumptions. You have to make this assumption. This is not assumption. This is something which is being given by the Act. The Indian Partnership Act says that in the absence of partnership deed or in the absence of any of the following clauses in the deed, what will happen? Profit sharing ratio equal. Interest on capital 0%. Interest on drawing 0%. Remuneration to the partner nil. What is remuneration to the partner?
Salary.
The partner is
commission.
working in the capacity of an agent. You have to pay him salary. You have to pay him commission. That is called as together remuneration for the hard work that he is doing. For the hard work that he is doing. For the risk that you're taking as a partner, you get profit and loss. For the risk of doing the business, what do you get at the end? Profit and loss. But there's one person who's doing the work on behalf of every other person. That agent who's working on behalf of the principal is getting salary and commission. So if you want salary and commission, in the agreement, mention how much salary, mention how much commission. If you don't have such clause in your agreement, then the salary and commission will be nil, 0. Any problem?
No, sir.
Remuneration, that is salary and commission, is not allowed to any partner in the absence of the partnership deed or in the absence of this particular clause. Any problem?
No, sir.
No,
Now,
sir.
very, very important point. Sir, loan by partner means partner has given the loan to the
Firm.
firm. Partner has given the loan to the firm. Loan by partner. Loan given by the partner. Now, in the partnership agreement, when the agreement was created, that time who thought that the firm will ask loan from the partner? So they forgot to document this point. The how much interest should be charged, like that, nothing is agreed. Now what has happened? Since the partnership deed is not there, or the clause with respect to this is not there, people have a conflict. Now firm will say, get lost, I'm not paying any interest. The partner is getting feel cheated here. Partner feels cheated here. When the firm wanted money, really I helped him. And now when the firm is not giving me the interest, don't you think it's a kind of a backstabbing? Now to protect the interest of the principal, that is the partner, to protect his interest, to protect himself, the law said that nothing doing. If a partner is giving loan to the firm and with regard to this loan, if there is no interest agreed upon, the firm by law, by default, have to pay how much interest? 6%. This 6% is protecting whom? Partner. So interest on loan by partner is paid at 6%. Am I loud and clear?
Yes, sir.
Yes, sir.
This is the case of interest on loan by partner. A lot of people have doubt. Sir, loan by partner 6% understood, sir. What about loan to partner? In loan by partner, partner gives loan to
Firm.
firm. In loan to partner, firm is giving the loan to
Partner.
Now here there is no interest agreed. There is no interest agreed. So here what does the law says? Law says 0%. Law says 0% because the entire objective of giving the 6% is to protect the interest of the partner. They wanted to protect the partner first, individual person who's at the mercy of the other partners, who's at the mercy of the firm. So they wanted to protect the individual helpless person. So for him it is 6%. Loan by partner. We want to help whom? Individual partner, struggling partner. 6% is for him. When it is loan to partner, it is 0%. Will you forget this?
No, sir.
So my question goes to all of you. In the absence of partnership deed, profit sharing ratio will be
Equal.
When I'm
Equal.
asking question, what are you supposed to do? Answer loudly. Improvement. Loudly answer I want. In the absence of partnership deed, profit sharing ratio will be
Equal.
Equal.
in the absence of partnership deed, interest on capital
0.
0%. In the absence of partnership deed, interest on drawing
0.
0%. In the absence of partnership deed, remuneration and commission salary.
Not
Not
allowed.
paid.
In the absence of partnership consent, loan to partner. Loan
Zero.
to partner
0.
0.
6%. Who's that? Loan to partner
0.
Loan by partner.
6%.
6% per annum.
You forget this.
No, sir.
Look at the power of revision. The more you recall like this, the more you become better at it. Mission 100 doesn't require any break, man. I'm coming. I'll give. Let me complete. Admission of a partner. Last point. Shh. I'll give break. I know. I can see your eyes. I know. I'm coming. Let me complete. I'm in a flow. Let me finish. Admission of partner. Now, show. A, B, C. Shh. 3 partners. C want to admit his close friend D as a partner. Now, in the admission clause, in the partnership deed, there's nothing mentioned about the admission clause. Any special power given to C or not, like that, nothing mentioned. Now, C wants D to be taken as new partner, but A and B are opposing to it. Now, assume there's no partnership deed, or partnership deed is there, but there's no clause with regard to admission of a partner. Now, can C admit D as a partner?
No, sir.
In the absence of partnership deed, or the partnership deed is there, but admission clause is incomplete. In that case, a new partner can be admitted only with the consent of
All partners.
All partners.
Imagine the agreement. If AB has given special power to C, well, drafting the agreement, let's suppose AB said that, C, you are the sole decider who will be taken as a new partner. You decide, macha. Like that, who is telling? AB is telling to C, and which A signed, B is signed, C is signed. Everybody agreed also. Now, C wants D to come as a partner. A and B are objecting it. Is objection allowed? No,
No.
because A and B, what they have done, they've given the power of admission to whom? In hands of C.
C.
Even if C is admitting the new partner D, nobody can stop. That is the power of agreement. If agreement is not there, then all the 3 partners has to agree. Only then D can come as a partner, otherwise not. We'll take a quick break of 7 minutes. We'll come back and continue with this next concept. Thank you. Some more important points, people. Focus. Welcome back from breaks. Let's continue. Yes, some more important provisions of the Indian Partnership Act. If all the partners agree, a minor may be admitted for the benefit of the partnership firm. A minor is incompetent to contract, but Partnership Act allows you to add a minor as a partner for the benefit of the partnership firm. If I take minor as a partner, if it can help the business to grow, then I can definitely take that minor as a partner. But the minor will only share the profits. He will never share the losses. A person may be admitted as a partner either with the consent of all the existing partners or in accordance with agreement. If agreement is not there, you can admit a partner with the consent of
all partners.
Or else, whatever the agreement says, you go as per the agreement. Like we said, no, C is given the power of admitting any partner. That is specifically agreed in the agreement. So in that case, C can admit D even if A and B objects. So you have to go as per the agreement. This is point number 2. Third, a partner may retire from the firm either with the consent of all the partners or in accordance with the agreement among the partners. So normally, if you want to retire from the partnership firm, you give a notice to all the partners stating that, boss, these are the reasons because of which I'm retiring. They cannot stop you. Or go as per the agreement that has been drafted. So in the retirement clause, if you have agreed that all the partners should agree, then only I will be retiring. Like that, if there is any specific clause, follow that. Otherwise, just give a notice and you can retire. Am I loud and clear?
Yes.
Point number 4. Registration of the firm under Partnership Act is optional. Registration is optional and not compulsory. So what is compulsory here? Having agreement is compulsory. Mode of agreement is compulsory. It should be in oral only.
No, sir.
Recording only. It should be in writing only. No. You are free to have in whatever modes you want to have, but agreement is compulsory. Registration is optional. Unless otherwise agreed by the partners in the partnership deed, a firm is dissolved on the death of a partner. Which means the 3 partners ABC, even if one dies, the business will be dissolved. If you don't want the business to be dissolved, in the partnership deed, you should have agreed that even after the death of a partner, the firm will continue. Like that, you should have agreed in the agreement. If you have agreeing that point, then the business will not be dissolved. But in the death clause, in the agreement of the death clause, you do not mention anything. You forgot to mention. If one partner dies, the firm has to be dissolved. So unless agreed otherwise, unless otherwise agreed. Otherwise agreed means what? You are agreeing in the deed that even after death of a partner, the firm will not dissolve. Even if one partner dies, the business will not dissolve. If you are agreeing that, then it will not dissolve. Otherwise, even if one partner dies, the firm has to be dissolved on the death of a partner. Any problem?
No, sir.
No, sir.
Liabilities of partners. Very quickly. A partner is carrying the business in competition with the firm. Let's say there are three partners, A, B, C. They're into supplying the building materials for construction purpose. They're into business of supplying the building materials for construction purpose. Now, what C did is, C is having a separate business. So, what is he done? He is doing the same business of supplying the building materials. So, a partner carries on the business in competition with the firm. So, can I say C is competing with his own business?
Yes, sir.
Without the
Yes,
consent
sir.
of the other partners. A and B are not aware of what C is doing, which means A and B has not given any approval that yes, you can do like this business. They have not agreed for it. Hiding from them, C is doing this business. So now, whatever the profit C is earning in his private capacity, that profit he shall be giving it to the firm. So whatever profit C makes here, that profit he has to give it to the firm ABC. This is what is point number 1. Any problem?
No, sir.
No, sir.
Now, if C is incurring any loss in his business, that loss I will not put on the ABC. However, loss incurred, if any, is borne by him alone. In C's separate business, in C's standalone business, if C is incurring any loss, that loss C only will bear. But if C is making any profit, that profit will be given to ABC. Why? Because C is doing the same business as the firm, is competing with the firm. C is getting benefit out of this. And that benefit he has to transfer to A, B, and C. Correct? No? As a partner, you should work hard for the firm's business, not your private business. Correct? No? ABC says that we three are partners. You work for the business, not for your private motive. You are thinking alone to make profits, which is not right. So whatever the resources of the business are there, who is enjoying that? C is enjoying. Not allowed. Next, point number 2. If a partner earns profit for himself from any transaction of the firm or from the use of firm's property or business connection, the profit so earned shall be paid to the firm. Example, ABC are 3 partners. Okay. ABC, 3 partners. Now, they want to construct their own office. They want to construct their own office building. Okay. Now, for this purpose, C is being deployed as in charge person to buy the building materials. So C is going to multiple person and asking for the quotation. So normally what are you supposed to do? Whichever company gives you the least quotation, you'll give the order to that particular company, correct? So now what C did here is that he did not do that. He did one tie-up with one company telling that, see, I'll give you 1 crore order for constructing my own building, office building. I'll give you 1 crore order. Now, if you want this order, 1 crore rupees order, you have to give me 10 lakh rupees commission. So what is he doing out of this 1 crore rupees to get this 10 lakh rupees commission? He is favoring this order to whom? To that person who's giving you the highest commission. So which means a partner earns a profit for himself from any transaction of the firm. So now the transaction of the firm, ABC, is transacting with a construction company for the construction of the building. Now, why did C give the order of construction for this company? Because his construction company is giving 10 lakh commission. Which means between this transaction, C has profited himself. Now that 10 lakh rupees commission, if you get to know, you have to hand over the 10 lakh commission to whom? The firm. Second, C is misutilizing firm's property. For example, this is, let's say, academy run by 3 partners ABC, let's suppose. So I am partner C. I am renting out this premises to somebody on hourly basis. And I'm making money out of it. And this my partners does not know. Imagine my partners does not know this. Without knowing them, I'm hiding from them. I'm giving this premises for, let's say, 2 hours every evening. And I'm making rent of 20,000 per month. Imagine. That is the cheating, no? You're hiding from your partners. Can you hide that? No. And hence, whatever rent you're making out of this, you have to give it to whom? Firm. Like that, you're using any business connection and making your personal profit. All that, you have to give it to whom? Firm. This is the liability of our partners. Any problem?
No, sir.
No, sir.
From the MCQ point of view. Accession-based question, case-based studies. Clear? Please go through illustration 1 and let me know if you have any doubts. Quickly, fatafat. Go through illustration 1. Whatever we have studied so far, the concept is applied through illustration 1. Please go through, and in this, if you have any doubts, please ask me. Go through. Fast. Do a revision in such a way that in future, if you don't get this time also, comfortably you should be able to recall. Think this is the last chance to study. You'll never get a chance one more time. Like that, properly, dedicatedly you study. Each and every point should be very clearly registered here. What are you guys doing? What did I say to do? Focus, focus. You frame the answer, I'll show the answer. Question ही तो है. Frame your answers, then we'll cross check the answers. Don't directly look into your answers. One mistake what people do in glancing. See and understand. When you have 5 days for your board preparation, it's not possible to go through work out all the questions. So definitely you have to do the glancing. You will glance it. You know what people make mistake in glancing? They read the question, they don't process the answer in mind. They immediately look at the solution, thinking that if I read the solution will be registered in mind. You're wrong. How are you supposed to glance a question? You look at the question, frame the answer in mind, and see whether that answer is there below here or not. Whatever you're expecting the answer to be, is it there or not, that we have to glance it. Don't read the question and read the answer immediately. Process the answer in mind and see in that place if that answer is there or not there. This is the right way of glancing. Done?
Yes, sir.
Cross check your answers. Cross check your answers. Done? No problem with the first illustration? Online people, please respond.
Yes, sir.
Everyone. Fast.
Yes, sir.
Yes, sir.
Yes, sir.
Can I go next part?
Yes, sir.
Illustration 2, take it as homework. If any doubts, let me know in next class. Now comes the important concept, charge against profit and appropriation of profit. Now, please tell me, what is the accounting process that we follow? Accounting is a systematic process of identifying a business, financial transaction and event. Then you
Record.
measure in terms of money. Very good. Then record through journal. Then
Summarize through ledger.
classify through ledger. And then you summarize through trial balance, trading P&L and balance sheet. So from after ledger, you prepare the trial balance. Why are you preparing the trial balance? To check the arithmetical accuracy. So from trial balance, you'll identify all the accounts. Which has got a flavor of income, gain, expense and losses. You'll transfer all of them to a place called as trading and P&L account by passing a closing entry. And all the other accounts which has got a flavor of asset, liability, capital will be traveled to the balance sheet, to check the financial position. So trading and P&L account is going to give you a financial performance and balance sheet will help you know the financial position. Okay. Now, this is the financial statement of a sole proprietorship concern. Trading, P&L and balance sheet is a financial statement of a sole proprietorship concern. That too a non-manufacturing entity, which means I'm not into manufacturing. If I'm into manufacturing as a sole owner, if I'm into manufacturing, then I have to prepare manufacturing account, trading account, P&L account, then balance sheet. Sir, in 11th standard, the factory related things we put in the trading account because you are not expert. You are Amul baby by then. So they didn't want to complicate it. Hence, the manufacturing account concept was not introduced. When you come to CA Foundation, if you are a sole owner, manufacturer, you're supposed to prepare an additional account called as manufacturing account, then trading account, then P&L account, then balance sheet. Likewise, when you come to partnership business, now here the financial statement is being changed. Now here what they told us, trading account you have to prepare and P&L account and then end P&L appropriation account. So this is a new addition to the financial statement of a partnership concern. Am I clear? So apart from trading and P&L account, you have something in addition called as P&L appropriation account plus balance sheet. So the financial statement of a partnership comprises of trading account, P&L account, P&L appropriation account, and then balance sheet. What does the financial statement of a company comprises of? Statement of P&L, statement of P&L, balance sheet.
Balance
First
sheet.
is balance sheet always. First is balance sheet always. In the company's first is balance sheet. Then statement of P&L, statement of P&L. Then notes to
Notes to
accounts,
accounts.
four cash flow statement.
Flow.
All these four documents are a part of a financial statement. So this financial statement is laid down by whom? Companies Act. This financial statement is laid down by partnership. Any problem?
No,
No
sir.
problem.
No, sir.
Now, please tell me, how do I prepare my trading account? Sir, 2 opening stock, 2 purchases, 2 direct expenses, buy sale, buy closing stock. When I say sale and purchase, net only, net of returns. What do you get here? 2 gross profit. If the income is more than expenditure, gross profit. Otherwise,
Gross loss.
any problem?
No, sir.
Now, in the 11th standard, very I clearly told you what is opening stock. Is it asset or is it expense? I told you very clearly there. Closing stock, why it is coming here? What is the nature? Everything is discussed there. So I'm not discussing this concept here. It is not applicable also. But you have to be very familiar with this point that what is opening stock, what is closing stock. It is neither asset. It's no asset. It's not asset. So the real meaning of that has been explained in 11. If you want to hear it for one more time, where will you come across? No. In the financial statement topic, this was again discussed. This was again discussed there. So that time I'll discuss one more time. Now, whatever the profits you get in the trading account, you transfer those profits to your
P&L
account. So this is your P&L account. By gross profit, let's say 10 lakh you got. From this gross profit, what do you minus?
Indirect expense.
Indirect expenses. Indirect expenses means, or direct expenses means, these are those expenditure which the transaction is happening between the business and the third party. When I say direct expenses and the indirect expenses, this is the money that the business has to pay to the third party. Any problem?
No, sir.
Correct. Now, in the trading account, in the P&L account, you record all the expenses which is incurred by the business with any third party. And these kind of expenditure, we call it as charge against profit. Means these are those expenditure I will record them in trading account. I will record them in P&L account, irrespective of whether my business is under profit or loss. Sir, already my business is under loss. I'm having a gross loss. Forget profit. Sir, I'm having a gross loss 10 lakh rupees. Will I still record the indirect expenses? Yes. But if I record this, loss will increase. No, sir. Doesn't matter. This is a charge against profit item. You have to record. You have to pay the money. You cannot run away from that. This is to protect the interest of the third parties. Sir, I have a gross profit, sir. 10 lakh. Indirect expenses, 12 lakh. If I record this indirect expenses, the profit will get converted to net loss of 2 lakh rupees. Can I do it? You have to do it. So when you record an item of charge against profit, whether the profit is reducing or whether the profit is converted to loss, you should not be bothered. A charge against charge against profit. A charge against profit is that item. You have to record it whether you have the profits or not. That is the beauty of charge against profit. Now, between the इसको फेंकना मेरे को एक बार. Between the firm and the partner people, there are numerous transactions that take place. Listen. Between the firm and the partner, numerous transactions takes place. And in these numerous transactions, there are certain nominal transaction as well. What is nominal transaction? A transaction which either results into expenditure for the firm, loss for the firm, or income or gain for the firm. So between these people, when a transaction happens, the firm might at times incur gain, income, or sometimes they incur expense and losses. So any transaction that happens between the firm and the partner, which is of nominal in nature, normally this goes to your P&L appropriation account. However, there is a deviation that has been done for the three items. The first item is interest on loan by partner, rent to partner, and then interest on loan to partner. In these three scenarios, especially the first two ones, they said very clearly that these two will be considered as charge against profit item. Will be considered as charge against profit item. So these three items will go to your P&L account, whereas all the other transactions will go to your P&L appropriation account. So can we first discuss about loan by partner?
Yes, sir.
Loan by partner. Loan by partner. So who is giving loan to whom, people? Loan by partner.
Partner to firm.
Partner to firm.
Yes. Partner is giving loan to firm. My question goes to all of you. What is the journal entry that the firm will record for receiving the loan amount?
Bank to loan by partner.
Bank account to loan by
Very
partner.
simple. Sir, we are receiving the money in the bank. Bank account debit to
Loan by
by
partner.
partner account. Wonderful. This is the journal entry for loan by partner. I've done it here. Journal entry for loan by partner. Bank to loan by partner. Everything I've documented for you. Everything I've documented for you. Second, at the end of the year, the firm owes in return what? Interest to the partner.
Interest.
Please tell me, partner is giving 10 lakh rupees to the firm. Is the partner giving this free of cost? No. Partner is expecting something in return, which is interest. And why should partner not expect something in return? For partner, this 10 lakh rupees is coming free of cost. Huh? If he invests this 10 lakh rupees somewhere else, in share market, in fixed deposit, he'll get dividend, he'll get interest. He's leaving that and giving that money here. No? So something you have to compensate him. So definitely the firm has to pay interest to the partner. So at the end of the year, 31st March, what is the due entry that you record for interest?
Interest on
means
loan.
what? Expense to liability. Means we are recording the expense and promise to pay him in the future. So what is my due entry?
Interest on loan to loan by
Interest on
Very
partner.
good. Interest on loan by partner account debit. So this is expenses, debit all expense and losses. Two, listen to me very carefully. In 11th standard, you learned that if any expense is incurred but not paid, you will record that in the outstanding expenses account. For example, salary incurred but not paid, salary to outstanding salary, wages to outstanding wages. So you recorded the liability in the outstanding, separate outstanding account. But here, for conveniencing what they said, no, don't record this in the outstanding interest account. You can record it, nothing wrong. But what will happen, when I open the balance sheet, people, now for this partner, I'll have two different liability ledger. So loan by partner will show the principal amount and outstanding interest will show the interest liability amount. So every single time I look at the balance sheet, I have to refer how many ledger? Two ledger. So having the information scattered in two different ledger is a irritating thing for me. Hence what we did, we combined that in the one ledger. So now instead of recording this separately in the outstanding interest ledger, you'll record it in the
Loan by partner
ledger itself. So what happened? The principal as well as the interest, everything will start now reflecting in the loan by partner ledger. Everything will be started reflecting in one single common place. So next time, if I go and open the ledger, acha, this is the principal. Oh, okay. This is the interest. Every single information you'll get in that one particular ledger. That is the beauty of this journal entry. Any problem?
No, sir.
No, sir.
This is called as a what entry? Due entry.
Due entry.
Very good. So loan by partner account. One more thing, what are you supposed to do at the end of the year?
Transfer entry.
They have to pass a closing entry.
Closing
All the
entry.
nominal accounts at the end of the year should be closed. It should not have any balance. So why should not have any balances? If any ledger, you allow them to have a balance. For example, interest. What is the entry you passed? Interest account debit to loan by partner.
Loan by partner.
To loan by partner, interest is 10,000. Okay. This is interest account. If this ledger has got a balance carried down, what will happen? If any ledger has got a balance carried down, that will go as a balance brought down in the next year. It will go as a balance brought down next year. So next year, balance brought down 10,000. Again, next year interest is how much? Same 10,000.
10,000.
Carried down is how much?
20,000.
So if I ask you, what is the next year interest? Is it 10,000 or 20,000? Actual interest of next year. What is the real interest of next year? 10,000. But how much is ledger showing?
20,000.
So if you don't close the nominal accounts, if you allow the nominal accounts to carry forward, it will get accumulated. So the purchases, sale, I will not get off that year alone. It will be accumulation of multiple years purchase, multiple years ka sale. Hence, it is very dangerous to allow a nominal account accumulate its balances. It will not give a true picture. If I want purchase, I want only for that year, not combined multiple years. Hence, all the nominal accounts having any balances should be closed by passing a closing entry and transfer either to trading account or P&L account or P&L appropriation account. Now, please tell me, what is the closing entry for this?
P&L account to interest on loan by partner.
Sir, interest on loan by partner is a nominal account. In debit, to close, I have to give a credit. So, to interest on loan by partner, I gave a credit 10,000. Okay. Debit in place of that?
P&L account. P&L account.
Sir, but you said if any transaction happening between the firm and the partner, which is of nominal nature, it should go to appropriation account. Yes. All the transaction happening between the firm and the partner, which is of nominal nature, goes to the appropriation account, except interest on loan by partner, rent to partner, and loan to partner. Interest on loan to partner. These three alone will go to your P&L account as a charge against profit item. Why? Now, please understand. Guys, when something goes to your P&L appropriation account, when you record interest on capital, you pay the interest on capital only when the profit is there. When the profit is not there, do you pay interest on capital?
No, sir.
Let's suppose you have a loss, net loss. Will you pay interest on capital to the partner? No.
No.
Will you pay salary to partner? No. Like that, imagine, had they taken interest on loan by partner also as an appropriation item, what will you say? I don't have profit, so I will not pay you the interest. Who is the person affected here?
Partner.
Partner who gave loan.
Partner who gave the loan is affected. Now, please understand. Why did the partner give the loan? Partner gave loan to the firm. Why loan? As usual, he could have given capital, no boss. As usual, you would have given capital. Why a partner is giving loan also apart from capital? Please understand, when the partner is giving capital to the firm is taking advantage here. What advantage? If the profit is not there, you don't pay interest on capital. Who is crying here? Partner is crying. He feels very bad. I gave 10 lakh rupees. It's been 3 years. I didn't get profit. I'm not getting any interest. Nothing. So partner is crying. He thinks, oh shit, had I invested this in share market, had I invested elsewhere, I would have made money. He feels very bad. But as an owner, you have to take the risk, boss. No other option. But now when firm wants further 10 lakh rupees, the partner clearly says that, look, if you want money, I'll give money. I have money. I will not give in the capacity of a partner because you take advantage of my being a partner, or me being a partner, you take advantage. Hence, I would like to give this as a loan. When you give this as a loan, this partner is treated like a third party. So how third party is protected? Same way, the Partnership Act will protect this partner as a third party when he gives the loan. The logic is clear.
Yes, sir.
Yes,
Hence, this interest on loan by partner is being treated as a charge against profit. Now, even if you have a loss, record the interest on loan by partner to the P&L. No drama, no excuses. Record it. So this is to protect. This is given to protect the interest of the partner. To safeguard the partner's interest, this decision has been taken. Any objections?
No, sir.
No, sir.
Now, 3 entries clear. 4th entry. What do you think the 4th entry could be?
Payment entry.
Where the firm will pay the interest to the partner, no? So the partner receives the money from the firm. What do you think is the interest? Sorry, what do you think is the entry for the receipt of the interest amount?
Loan by partner to cash or bank.
Very good. Sir, firm is paying the interest to the partner. Who is paying the interest?
Firm.
The loan given by the partner. Partner gave loan to the firm. So who will pay interest?
Firm.
Firm will pay the interest to the partner. So for firm, money is going out or coming in?
Going out.
Firm going out, money going out to cash or bank. And when the money is given, your liability is increasing or decreasing? Your liability is decreasing. The liability is sitting in the which ledger? The interest is sitting in which ledger? Loan by partner's ledger. So what is the journal entry for payment? Loan by partner account debit, not interest. Loan by partner account debit to cash and bank. This is the journal entry for the payment of the interest. Because the interest is sitting in which ledger? LBP ledger, loan by partner ledger. All these 4 entries I've given here. What is the journal entry for loan given by the partner? What is journal entry for interest on loan by partner? Due entry. What is a closing entry? And what is a journal entry for the payment of interest? All the four I've covered. This is handy when you do the revision in that 5 days holiday. Now, how are you supposed to do the revision? When you come to this concept, read this concept. The 4 journal entries you recollect and see whether that entry is there in that particular page or not. That is the revision that you're supposed to do. That is how the revision is supposed to be done. Powerful way of doing the revision. Am I clear?
Yes, sir.
Sir.
Next, the concept of interest on loan to partner. Interest on loan to partner. Who is giving loan to? Loan to partner. Who is giving loan to?
Firm giving to partner.
Sir, firm is giving loan to partner. Who will be giving the interest to whom?
Partner.
Partner will be giving interest to firm. So for firm, interest is income or expense?
Income.
Now listen to me very carefully. What do you think is a journal entry when the firm is giving loan to the partner? Journal entry.
Loan to partner by cash. To cash.
Sir, firm is giving the money. So to cash or bank. Any problem?
No, sir.
No, sir.
This money, what you're going to give, will come back to you in future. One day it will come back. No. Whatever money I give with the hope that I'll get the money back in future. Anything that I get in future is asset. To record asset, debit, asset. But what is the account name?
Loan to partner.
Loan to partner. Or loan advance to partner account. Loan advance to partner. Loan is advanced, given. Loan advance to partner account. Debit 10 lakh to cash in bank. So this is asset. Increase of one asset, decrease of another asset. Any problem?
No, sir.
No, sir.
Loan to partner or loan advance to partner account, debit to cash or bank. Now please tell me, at the end of the year, you're supposed to pass a due entry. Due entry for recording your income. What do you think is the due entry for recording the interest income?
Partner's capital or current account debit to interest on loan.
Sir, interest is my rightly said. Interest is my income. Debit all expense and losses. Credit all income and gain. So to interest on loan to partner. Sir, interest 1 lakh I'll credit, sir. Let's say 10% interest. On 10 lakh, 10% how much? 1 lakh. Now what will you debit? Now don't put loan to partner account. Sir, in loan by partner, what did you do? Whatever the interest is there, in the loan account itself, in principal account itself, you recorded interest. In loan by partner, principal is there in loan by partner account. Interest also was recorded in loan by partner account. But here you will not record the interest in the loan to partner account. Principal will be in the loan to partner account only. But the partnership act said that the interest component alone will be recording either in partner's capital account or the partner's current account. Am I loud and clear? So here
Yes.
they said that is 1 lakh rupees. What I have to get from the partner? I will not wait for the partner to give me the money. I will adjust it from the capital account. Firm says that I will not wait for this person to come and give me the money. I have a power. I have the kudumi of the partner. I will catch hold of his kudumi if he does not pay the money. So partner's capital account debiting means what? I'm attacking his capital. I am not waiting for that person to come and pay the money. The firm is saying, who the hell are you? Why should I wait for you? I have your money with me. So I'm adjusting against your money. I will not be behind you. I will not run behind you. I will adjust from your capital. Capital is what balance? Credit balance.
Credit balance.
To increase capital. To increase liability, credit. To decrease liability,
Debit.
So debiting partner's capital means we are attacking somebody's capital. Which means to that extent, we will not pay him the money. Am I clear with the logic?
Yes,
Yes,
sir.
sir.
Now, at the end of the year, since this interest on loan to partner is a nominal account, you're supposed to transfer it to the trading P&L appropriation account. The question is, where will you transfer this?
P&L account.
P&L account.
P&L account. Because in the case of loan by partner and loan to partner, the partner is no longer a partner. The partner is to be treated like a third party. Any third party transaction goes to either trading account or P&L account.
P&L account.
Appropriation account. Hence, this has to be transferred to your P&L account. What is the entry?
Interest on
loan to partner to profit and loss account.
P&L account. So in the P&L account, by interest is recorded in the income side. Any problem?
No, sir.
All the 4 entries I have recorded here also for you. Sir, can I treat the interest on loan to partner as a charge against profit? Is it a charge against profit? Charge against profit means what? If any item reduces the profit, if any item is going against the profit, that is charge against profit. So what goes against the profit? Expense and losses. Expense and losses oppose the profit. Expense and losses, if we record, it reduces my profit. This is not a charge against profit. It's a normal third-party transaction is treated, and you record as a normal indirect income. Any problem?
No,
No,
sir.
sir.
Next is rent payable to partner. See, this is a scenario where the three partners A, B, C. For doing the business, they want a premises. The location where they want the premises, luckily, B has got the property in that place. Now tell me, a prudent businessman, will you go and approach B telling or requesting B, we want the office or shop or factory in that place where you have the property. So will you go and ask him to rent that property out to you, or will you take the property from some third party? First common sense is we'll go and ask him whether he's having the property available. If available, we'll take that property and we pay rent to him. Correct? No? This is the concept of using the personal assets of the partner for the purpose of business. But here they've told very clearly, when a partner is letting out any premises to the firm, so this partner should not be treated like a partner. He should be treated like a third party. Therefore, whatever rent the firm pays, it has to be treated as a charge against profit item only, and it has to be paid irrespective of whether there's a profit or loss. Irrespective of whether there's a profit or loss, you have to pay the rent. Otherwise, the firm will take the advantage of the partner. No? Continuously, they'll be in loss, and this B is not being paid rent. Imagine B's plight. He will feel bad. Oh shit! Had I not given this property to this fellow, had I rented out separately, I would have got monthly 50,000 rent. But by giving the premises to the firm, I made a biggest mistake. So there'll be a conflict between whom? B versus other partners. Because B is getting angered upon the other partners. These people are not paying rent also. Business is constantly into profit. So now there'll be conflict between A, B, C. To avoid that conflict, law said that treat B as a third party in this case. And treat this item as a charge against profit. Treat this item as a charge against profit. Now here, the entries are slightly different. To the extent the rent is paid, you'll not pass a due entry. You'll directly pass the payment entry. Rent account debit to
Bank.
cash or bank. Direct payment entry. No due entry. Rent to rent payable, then rent payable to cash. That will not come. Wherever the rent is not paid, the entry will be rent account debit to rent payable. When the payment is done, rent payable to cash or bank. So this is the entry for the payment, and this is the due entry for rent outstanding. I'm not saying this is that in textbook. And rent being nominal account, we have to close it by passing a closing entry. What is a closing entry here?
P&L account to rent.
P&L account to rent.
P&L account debit to rent. P&L account debit to rent. So for rent paid, rent to bank. For rent payable, rent to rent payable. And both this rent are expenses, nominal account. To close, I have to give a credit, and it's transferred to P&L account. So this is a charge against profit item. This is a charge against profit item. Whatever entry has been given in textbook, the same entry is given in my notes also. And the same entry I've done it in my whiteboard also. We're not done. Please settle down. When the rent is paid in cash, rent to cash in bank. When rent is payable, rent to rent payable. And all of them is transferred to your P&L account. Now, we're not going anywhere. Settle down. We've done the theory part, conceptual part over. Who will sit and see the questions? No homework. Right now, we'll go through illustration 3. Please go through illustration 3 and let me know what problems you have. I'm very clear, whatever we are studying now, study such a way that you never forget this point. Finish it off there and there. Finish it off there and there. Please go through illustration 3 and let me know if you have any problem. Akhil is given 2 lakh loan. Bharat is given 1 lakh loan. No, that is capital. 2 lakh
4 lakhs and 2 lakhs.
Akhil is given 4 lakh loan. Bharat gave 2 lakh loan. When? On 1st October. So from 1st October to end of the year? How many months?
6 months.
6.
So 4 lakh into what percentage?
6%.
The partners have not agreed the rate. In the absence of partnership deed, loan by partner, 6%. So 6 by 100 into 6 by 12. How much? 12,000 is the
12,000.
interest due of Akhil. And what is Bharat's interest?
6,000.
6,000.
2 lakh is the loan given by partner Bharat. 6 by 100 into 6 by 12. How much?
6,000.
6,000. So total charge against profit is how much?
18,000.
18,000. Anya, what happened? Settle down, settle down. Sit. Is this understood? Case 1.
Yes, sir.
The profit before deducting interest or before charging interest is 25,000. Guys, in the P&L, the profit is 25,000. Can I record the interest? Record it, boss. This is a charge against profit item. You have to record it. So how much you will record? 12,000, 6,000, 18,000 I'll record. So what is the balance net profit?
7,000.
7,000.
7,000 is the balance profit. Any problem?
No, sir.
Case 1, no problem. Case 2, there will be a problem. Now, what is the profit before giving the interest?
15,000.
25,000. Sorry, 15,000. Now, the problem is, if I record interest of 18,000, that is 12,000 and 6,000 is resulting into loss. Can I let that happen?
Yes, sir.
Because it's a charge against profit. I'm not bothered about the profit getting converted to loss. I'm not bothered about the profit getting reduced. I have to record this as interest. So when you record it, what is your loss?
3,000.
3,000.
Loss. Let it be. This loss will transfer to your P&L appropriation.
P&L appropriation.
Second case, third case. Already there is a loss. How much? Gross loss, how much?
25,000.
25.
Can I record the interest? You have
Yes.
to record it. You will not be bothered about it. Record it. How much?
18,000.
12,000 and 6,000. So, but this will increase the loss. No, I'm not bothered. In charge against profit, you are not bothered about anything. You have to record it. So, what is my incremental loss?
43,000.
43,000.
40,000 rupees is my incremental loss. This will be transferred to your
43,000.
43,000. Okay, 43,000 will be transferred to your P&L appropriation account as loss.
Loss.
Now, did you understand why I asked you to go through the questions or concept before coming to the class?
Yes, sir.
So, you know that this is what I'm going to discuss. If you read once and come, no, the revision speed can be a little bit faster. Whether while going through at home, you understood, not understood, doesn't matter. But you go through and come, no, what exactly doubt is, it will be there in your mind. Now, when the doubt I'm clarifying in the class, no problem. If I'm not clarifying, then and there you can ask, no, sir, this problem I did at home, I got stuck here. Can you please explain one more time? Imagine you come sit here without any revision. So whatever I'm taking, you're just in the acceptance mode. Acceptance will happen only for first 1 hour. Acceptance will happen only for first 1 hour. After that, concentration will dilute. But in revise and come, no. Whatever I'm discussing, you're able to recollect everything. So your energy is high, your enthusiasm is high. So involvement actually will be more. Psychologically, I'm telling you, this is what will happen. That's why I told you, whatever concept I'm going to take, I'll inform 2 days in advance. Please revise that and come. Please revise that and come. It makes your life easier when I do the revision. You'll become more comfortable and flexible in the revision classes. I don't want you guys to sit next time together. Illustration 4, you can take it as homework. It's a similar model, but different version. You can take it as homework. Fifth one, please take it as homework. Interest on loan to partner. Interest on loan to partner. Please go through illustration 6 and let me know if you have any doubts. Rate of interest not agreed. Rate of interest not agreed. Guys, loan to partner, rate of interest not agreed. In the absence of partnership deed or the clause is not there,
No
interest will not be charged. This is what has been agreed here. Did I tell you? Interest on loan to partner. Loan to partner is 0%. Interest on loan by the firm to partner. Interest on loan to partner is charged at the agreed rate of interest if partners have agreed the interest. Otherwise, it is not charged, which means in the absence of partnership deed, or partnership deed is there, but in that you forgot to agree the interest percentage. In that case, it is not being charged. It is 0%. Any problem?
No, sir.
What is
No,
the doubt?
sir.
What bank entry? Boss, this is the what is the requirement? Look at the question. Prem had taken a loan from the firm on 1st Jan 25 lakh. For taking the loan, the entry will come. This is loan to partner, no? So we gave the loan. So what is the entry? Loan to Prem. Loan to Prem account debit to bank. That will come. Interest entry will come or not?
No.
Because in the absence of partnership deed or in the absence of any particular clause, what happened? Interest is 0. So if you are sitting in clause A, there's no journal entry. No journal entry is passed for the interest part. Second case says that in case the rate of interest is agreed at 10%, then what is the entry? Due entry. Interest is income for the firm because firm gave loan to the partner. So partner will pay interest to the firm. So for firm it is income. Credit all income and gain. And this money, 12,500, did you receive from Prem?
No.
Did you receive it in future?
In
Until
future.
I receive the money, I'll catch hold of his
Capital account.
Prem's capital account debit to interest on loan. And this partner is treated as a third party. So this will be transferred to his P&L account.
P&L
So
account.
interest on loan to partner account debit to P&L account. Easy.
Yes, sir.
7th one, take it as homework. 8th one, do it. With this, we'll wind up. Do it fast. Whatever rent is paid through bank, directly rent to cash bank. Whatever rent is not paid, entry is rent to rent payable. And finally, the rent should be transferred to your P&L account. Very good. Done?
Yes, sir.
Cross check
Yes,
your
sir.
answers here. 5,000 is rent per month. Shh, I'm not done. 5,000 rent per month. 11-month rent paid. So 11 to 5 is how much? 55,000. So the rent paid, rent to bank. March month rent not paid. When will you pay April month? But in between year end comes, no? You're following which concept? Matching principle. Matching principle says that if you've got any benefit of that particular service, you have to record that as your expenditure. Record the expenditure to the extent benefit received. Record the expenditure to the extent the expenditure is contributing to the revenue. Here, March month, you enjoyed the premises. You got the benefit? Yes. Then you have to record your expenses. Who is saying this? Matching principle. Matching principle. Matching principle says that your expenses and benefit needs to be matched. If benefit received, record as expenses. So March month, I utilize the property. So that is my expense due. But did I pay? No. When will I pay? In future. Anything that I pay in future is liability. And to record liability, we'll give a credit. Any problem here?
No, sir.
Now listen to me very carefully. If you want this revision session to be more, adding an advantage to you, be more stronger, there's certain things that you have to do. One, revise before class. Even if you glance, I'm okay with it. I'm telling you, if you follow the steps, this revision session, what you're going to do with me is going to be the best revision session. I'm telling you, high chances of bouncing back. All those people who are out of track, one last chance to bounce back. Revise before the class. Revise with me. So what happened? When you revise and come beforehand, and when you revise with me, double time revision happens. So the lot of concepts that you are able to resonate with me during the class. And if you have any doubt in that concept, your prior hand ready with your doubts. Now, what are you supposed to do after this? Whatever revision you have done with me, within 12 hours or 24 hours, you have to not revise.
Recollect.
You have to recollect. Very good. Recollect. I told you the difference between study, that is class, study, revision, and recollection. Now you are into recollection period. So now you will try to recollect it. Preferably tonight itself, before going to your bed, try to recollect. If possible, one more recollection. Tomorrow morning, before you go to school, or somewhere during the school, wherever you get time in between, do one more revision. If you do this, no, I dare you forget this. From here, once in every 15 days or 30 days, one more recollection, just to check whether you've forgotten or not. If you're able to recollect, everything is okay. Means memory is fresh. If you're forgetting after 15 days or 30 days, it's a sign that you have to again sit and revise. This is bare minimum. Sir, I'm quite strong with the concept. Can I skip the night recollection? Can I do the morning? Or can I do the night one, not morning? If you are flexible with any topic, you feel some topic is very easy, that much revision is not required. So either you can skip the night and do the morning, or skip the morning and do the night one. This is only for the easy topics. Tough topics, you have to recall. And the same strategy you have to adopt for the other theory subjects. The more you revise, the more you recollect. In the regular intervals, it will stay fresh in your mind. Otherwise, what will happen? No, whatever you have studied today, it goes down. You study today, you go home, new memory. So that new memory is there on the top. Then tomorrow morning, school memory on the top. Then evening memory, night memory, next day morning memory. Like that, whatever you've studied today, it goes in the bottom. When it goes in the bottom of the ocean, your memory is your ocean. The subconscious mind is like your ocean. Whatever goes down, 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 deep into it, it is as good as permanently lost. So we don't want that data to go down deep. A small recollection will come on the top. Still go down, down, down. Again, after 15 days, one recollection. This is the power of revision. Stands good not just for your accountancy, for all the other subjects. Try and see. I'm telling you, you'll get blissful results. I've done for my own journey in the CA final. My students across 11th, 12th, foundation, intern, and final students, everybody's adopted it, and people have come out with a very positive response. You try it and you give me your response. Worth it, I'm telling you. Next 90 days, people, forget everything. Forget every single thing. Don't get engrossed in anything. Just focus on your preparation to get going with 90 and above. I'm not talking only about accounts. I'm talking about in general 90% and above. Getting 89% and 90% is a different feeling. Whatever end result happens, we'll accept it. We'll not question it. But now, these 90 days are under your control. Process should be in such a way that you end up getting 90. Despite that, if you don't get 90, we will not question the end result. We'll accept it as a God's reward. Prashadam, we say, no? We'll accept it as it is. But the process of next 90 days, don't deviate. If you're getting too much frustrated by studying, you take a break. I don't say no. If you get too much frustrated, annoyed with back-to-back schoolwork, exams, tests, if you feel annoyed, you take one full day break. I have all hearts for you. I'll give you the permission that is required to go out from your parents. But when you're okay, you feel that yes, I can do it, don't just give you 100%, give it 1000% people. I'm telling you. This 90 days, you have to work so hard and you have to get going that results for your parents, boss. I'm telling you. First, and the foremost thing that you have to do is get a good result for your parents. They deserve this score for the amount of sacrifices what they've done. They deserve that good name. Try for it. When you go night to night and sleep, at heart you ask yourself, have I given my 1000% today? If the answer is yes, aram se sleep off. If you wasted your time, Snapchat, Instagram, you wasted your time, feel very sorry for it. I'm telling you. Whatever time lost so far, whatever the mistakes done in the past, done. We cannot undo it now. Whatever is gone is out of your control, but the next 90 days is under your control. Effectively utilize it, efficiently utilize it, and convert your weakness into strength. Every small bit of preparation every single day will ensure that you have a lot of accumulation of knowledge in mind, good enough to score 90 for you. What is that saying in Hindi? बूंद बूंद से घड़ा भरता है, बूंद बूंद से घड़ा भरता है, बूंद बूंद से सागर भी भरता है, घड़ा भी भरता है, दोनों भरता है. Every drop of water makes a mighty ocean. So every single day from here for 90 days, you constantly study. I'm telling you, you will realize at the end of the 90th day, the amount of knowledge what you've gathered is good enough to get going with the 90 and above. So don't feel pity on yourself. I studied 13 hours a day. I'm tired. Never, ever pity your own self. You're tired, sleep. You want a break, you go out. But don't feel pity for yourself. Don't feel pity for working hard. Irrespective whether you're a student or a person at job or a person at business, you have to work hard. Do not pity yourself. Everybody is doing their part. Your mom as a housekeeper, she's doing her best. Your mom as a housekeeper, a professional who's working at multiple places is doing her job. Your father is doing his job. Then who are you to be spared, boss? Who the hell are you to be spared? Till end, you have to work. You have to study. Don't feel pity for that. It's your moral responsibility to do your needful. Please do it wholeheartedly. Wholeheartedly. If you crib and do anything, nothing will come here. Nothing will come here. Don't crib about anything. Never ever crib about anything. Whatever you do with love and affection. This teaching, what I'm doing, it's out of my love and affection. Have you ever seen me doing any shortcuts for teaching? Whether you like it or don't like it, I give the explanation what I'm supposed to give as a teacher. I educate the person, the students, as I'm supposed to do it. No shortcuts when I'm taking. Why are you taking the shortcuts? Please don't run away from your responsibilities. Please. Can we all do it together? And I'm not saying to do this all by your own self. It's a teamwork. Let's do it together. And the mission is 100. I've tasted the flavor of 100. Last batch. 99 has got a different flavor. 100 is a different flavor, boss. I'm telling you. Cake, normal butterscotch cake, different flavor. Different taste. Lotus Biscoff. Those who like it, you taste it, you know the worth of it. 100, it's got its own unique flavor. Worth tasting it, I'm telling you. Worth tasting it. When I saw my student getting 100, I felt so happy. Imagine that student, how much happy he would have felt. Worth it, I'm telling you. Try and see. And some people have the notion, sir, all this while in school, out of 80, we've been getting only 60, 55. School papers, academic papers will be tough. The questions will be corrected in a challenging manner only. Why? Because if you give chumma mark here and there, you get overconfident. To cut down your overconfidence, what we do is do all this drama. But at the end, if you work hard, you get your deserving marks. That can be even 100. Never underestimate yourself. Can we do it?
Yes, sir. Yes, sir.
Yes, sir.
Mission 100 is on. Mission 100 is on. On that note, let's sum up today's session, people. That's all from my side for this session. I'll see you all on Friday, 6:30 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Yes, sir.
Thank you.